Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to buy put options on Webull. Open the Webull app and log into your account. Tap the search bar, find your ticker, and open the options chain. Filter by put contracts and review available strikes and expirations. Compare bid-ask spreads, implied volatility, and delta to match your outlook. Set an order quantity and prefer limit orders to control execution and trading costs. Choosing a strike and expiration is about probability and cost, so balance them carefully. Shorter expirations cost less but face faster theta decay, while longer ones cost more but give time. Use higher delta for stronger directional moves and monitor implied volatility spikes near events. Size positions to limit downside and confirm you have sufficient buying power. Set alerts for news and price levels that could change trade outcomes. Place orders thoughtfully and always double-check quantity, price, and expiration before submitting. For buying puts, use limit orders to avoid temporary wide spreads, and for selling puts, no assignment obligations if exercised. Monitor your positions daily, especially around earnings or news that spike volatility. Consider rolling to another strike or expiration to adjust exposure rather than closing at a loss. Keep a trading log to learn from wins and mistakes.
Thanks for watching. Consider subscribing if I helped unscramble your problems.